Hello friends, what's up? So let us continue international economics. Up to now we have studied about the exchange rates, right? The foreign exchange markets. Okay. What are the different foreign exchange regimes, how it got evolved over the years. So in this particular video we are going to look at another topic in international economics, which is the investments. Okay, foreign investments. So foreign investments, basically, to refresh our memory, it forms a part of the capital account in balance of payment. Okay, so till the time we are studying international economics, please keep the balance of payment in your mind. Okay, this is very important. It should be in the backdrop, like every time you study any topic from international economics, how it is going to affect the balance of payment, where the entry will come in balance of payment. So we know that balance of payment, broadly there are two accounts, the current account and the capital account, right? So foreign investments is a part of the capital account of balance of payment. So just keep this in mind. Now let us begin, learn about the foreign investments in detail. And after this topic is over, after maybe we will take some 2-3 videos for this particular topic. And I hope you will understand it. Once we are done with this topic, you will have every concept clear. So let us begin. So foreign investments, basically there are two types of foreign investments. One is a foreign direct investment and another one is called foreign portfolio investment. Okay, these are the two broad categories. Okay, category 1 and category 2. You must have already heard these terminologies, FDI and FPI, but sometimes we don't really clearly know what is the difference between FDI and FPI, and how to distinguish them. If any question comes from this topic, sometimes our concepts are a little hazy. Okay, तो इतना clear नहीं होता है, but after watching the videos of this topic, I'm sure it will be clear to you. Again, the foreign portfolio investments can be of two types. So one is the foreign institutional investments. Okay, it can be the investment by the foreign institutions. Okay, and another one is a qualified foreign investment. Okay, we'll look into this in detail. Okay, what are these? You will understand them. One more thing, keep this in mind, that foreign institutional investments can also be foreign direct investment under certain situations. Okay, under certain circumstances, foreign institutional investments may result into foreign direct investment also. Okay, so foreign institutional investment are not always only FPI, they can also be FDI. When it will happen, we will see this in detail. Don't worry about it, you will completely understand how it will happen. Okay, so in this particular video, our focus will majorly be on the topic of FDI, foreign direct investment. Okay, so foreign direct investment, basically it means that it is an investment by a foreign company or a foreign individual. Okay, foreign meaning they are non-residents of India. Okay, so they can be they can be the citizens of India but living abroad. Okay, so they are the NRIs. Okay, they are the NRIs, or they can be foreign citizens like American citizens living in America. So basically non-residents. As we already seen in BOP, the balance of payment records the transactions between residents and non-residents. Okay, and not the citizens and non-citizens. So non-residents, whenever they are investing, okay, in India, so we will call it a foreign direct investment. But when do we call it a direct investment? Okay, when it involves either establishing a new business operation, okay, or acquiring business assets, including controlling interest in an already existing Indian company. So basically it can be that they are completely buying a new land. On that land they are building a new factory and they are starting some manufacturing process, or it is called as greenfield investment. Greenfield meaning, okay, they are starting from scratch, they are starting from the ground. Okay, that's why it is known as greenfield. And if there is an already existing Indian company, for example, say company called Tata, okay, and if some foreign investor is coming and he is acquiring shares of Tata, he is investing into Tata, so that is known as brownfield FDI. Okay, brownfield investment. Already there was a factory, there was an office, But now this company is coming, they are buying the assets of this company, they are investing in this company in the form of equity, and they are also taking the control of that company, okay, control of the management. So taking the control of management is very important for an investment to be called as FDI. Please keep this in mind. Okay. Now FDI establishes a long-term relationship of the non-residents and the residents. Okay, it is not for a short time. People invest through FDI and not take their money overnight. Okay, आज invest किया कल पैसा निकाल लिया, ऐसा नहीं होता है. So it is a long-term relationship. And substantial control over decision making of the company is established, because see, if somebody is investing in an already existing Indian company, they are buying equity shares of that company, they are buying some assets, so they become a part of decision making management of that company. And foreign direct investment is always done for some business purpose, okay, not for capital gains. They are done because they want to do some business here. Okay, either they are establishing a new company or they are buying the stocks in an already existing company. So they are doing it for the business purpose. उनको कुछ business करना है, कोई धंधा करना है यहाँ पे इंडिया में, इसलिए वो लोग आ रहे हैं. And that's why it is a long term relationship. Okay, it is a long term relationship. Now in India we have Companies Act 2013. So Companies Act 2013 says that if a foreign investor, that is a non-resident investor, owns more than 10% shares in a listed company, okay, it will be treated as FDI. Okay, so if any foreign investor, if he buys more than 10% of shares or holds more than 10% shares of any listed Indian company, that investment will be called as FDI. Okay, and in an unlisted company which are not listed on stock exchange, okay, which have not yet done the IPO, initial public offering. By this time you should know the difference between listed company and unlisted company. We have learned this when we have studied the financial markets. So if any foreign investor is investing in an unlisted company, that investment should be in the equity, it should be in the shares and not the bonds of that company. Okay, if they are investing in the shares of that company, it is considered as FDI. It can be any investment, not necessarily 10%. So it can be 5%, it can be 50%, it can be anything. So anything invested in unlisted company by a foreign investor is counted as FDI. So this is what is defined in Companies Act 2013. Okay, now see what can happen. For example, if a foreign investor is holding 10% share in a company, it can happen that the existing investment falls below 10% if say that company issues new shares. Okay, so previously the total market capitalization was say 100 million. Okay, now out of this 100 million, say for example this foreign investor was holding 10 million. So he was holding 10%. Now this company has issued additional shares and now the market capitalization of that company becomes say 200 million. Okay, but this foreign investor is still holding 10 million only. So now the shareholding becomes 5%. So will it be counted as FDI in this case? Will it still be counted as FDI? Yes. So it is still counted as FDI. So Companies Act 2013 says that once an FDI, okay, always an FDI. एक बार FDI बोल के इन्वेस्ट हो गया तो उसको FDI बोल के ही काउंट होगा हमेशा से. So this is very important. Now in FDI only equity financing is considered. Okay, only equity financing is FDI. In order to have an investment counted as an FDI, it should be equity financing, investment in equity and not in bonds. It can be in fully convertible debentures. Okay, so debentures are basically bonds, but these debentures should be the fully mandatorily convertible debentures. Okay, so at the maturity, these debentures will be converted into equity. So they are in a way equity only, but right now they are debentures. In future at the maturity, they will become equity or other convertible securities. So any convertible securities which can be converted into, which should be converted into equity, are also considered here. Depository receipts also, we have already seen what are depository receipts. So American depository receipts, global depository receipts, right? So depository receipts are investment in depository receipts are also in investment and in equity in a way. So they are also considered part of FDI. Okay, they are also allowed here. Then preference shares, again equity, and share warrants. Okay, share warrants basically are kind of rights. Okay, they are rights given to, they are distributed to certain people or they are sold to certain people, and these are the rights to buy shares in future. Okay, buy equity at a future date at a discounted price. Okay, at a future date at discount. So it is a kind of rights only, but rights are issued to the existing shareholders, whereas share warrants can be issued to anybody. So that is a difference. Okay. Then who regulates the FDI in India? Okay, regulation of FDI is done by both Government of India, Ministry of Finance, and also the RBI by the FEMA Act. Okay, by RBI. Now, what is FEMA Act? FEMA Act is basically Foreign Exchange Management Act. It was enacted in 1999. We will look at this act in detail when we look at the economic reforms. Okay, but right now just keep in mind that all the foreign investments are regulated by RBI through FEMA. Okay, FEMA is the act. And Government of India has a FDI policy which is regularly updated. Okay, so Government of India, Ministry of Finance updates the FDI policy, and it gets changing. Okay, basically. So in FDI policy there are sector specific rules. Okay, sector specific basically upper limit up, what is the maximum percentage of foreign investment that are allowed. Then there are entry routes also. So what are entry routes? I'll tell you, I'll explain to you. So that is mentioned in the FDI policy. Now what are entry routes? Let us look at here. So entry routes are basically, there are two types of entry routes. Entry meaning if a foreign investors want to invest as an FDI in a country, so he has to come through certain routes, right? So there are two routes. One is automatic routes and one is a government route. In automatic route, they can directly invest in that particular sector, in that particular industry, without any approval from RBI or Government of India. Okay, approval from RBI meaning obviously they have to inform RBI through the FEMA Act. Okay, they have to inform RBI, they have to report their investments. It's not that without any report they can do it, but they don't need any approval as such. And Government of India approval is also not required. Whereas if they have to come through government route, there is another route, government route, for certain sectors, for certain specific industries. So Government of India approval is required. Okay, so how they are going to take approval of Government of India? Basically they will apply online through the Foreign Investment Facilitation Portal. Okay, this Foreign Investment Facilitation Portal is a portal of Department of Promotion of Industry and Internal Trade. Okay, DPIIT, which is a department under Ministry of Commerce. Okay, which is a department under Ministry of Commerce and Industry, and this department has created this portal, online portal, Foreign Investment Facilitation Portal. Okay, before FIFP there was another body which was known as FIPB, Foreign Investment Promotion Board, but Foreign Investment Promotion Board is abolished in 2017-18. So in 2017-18, when Shri Arun Jaitley was our finance minister, he had abolished FIPB in his budget speech. Okay, he had announced this in his budget speech of 2017-18, and FIPB was abolished, and in place of FIPB, FIFP was brought in place. It was an online portal, and through this online portal people can apply for a foreign investment for a government route, and then those applications are forwarded to the respective ministries, to the respective departments. Okay, for example, if that application is for, say, manufacture of some defense equipment. Okay, I'm just giving you an example. Manufacture of defense equipment, if somebody wants to do an FDI in this industry, so they will apply through FIFP, and then they will that application will be forwarded to Ministry of Defense for its consideration, like that. Now see, foreign investment in any form, okay, any form, whether it is FDI or FII, foreign institutional investment, or FPI, whatever, okay, or qualified foreign investment, anything, it is prohibited in the following sectors. So no foreign investments are allowed in the following sectors. One is business of chit funds and nidhi companies. In chit funds, only the NRIs on non-repatriation basis they can invest. Okay, NRIs means non-resident Indians. They can invest in chit funds through the non-repat basis. This we are going to see in maybe another 2-3 videos, after 1 or 2 videos, what is the meaning of this. But just keep in mind that in chit funds foreign investments are not allowed except for NRI investment on non-repatriation basis. Okay, nidhi companies mein investment are not allowed. Then manufacturing of cigars, cigarettes, of tobacco and tobacco products also not allowed. No investment is allowed. Then no foreign investment is allowed in agricultural and plantation activities. Okay, then no foreign investment is allowed in real estate business. Okay, real estate business. Now what is the meaning of real estate business? It only means buying and selling of real estate. For example, there is a property. So some foreign investor is coming, buying this and then selling this for making capital gains. Okay, so that is known as real estate business and it is not allowed. Whereas foreign investment is allowed in construction or development of townships, residential, commercial premises, roads, bridges, okay, real estate investment trusts, renting of real estate, broking business, etc. These are allowed. So real estate business only means buying and selling. मतलब prohibition कहाँ पर है? सिर्फ buying और selling के ऊपर है. They can do the construction and development, they can do the renting, they can construct bridges, roads, etc. Then another area where foreign investment is completely prohibited, it is construction of farmhouses. Okay, it is not allowed. Then another business where foreign investment is prohibited is trading in transferable development rights. Okay, TDRs. Now let us look at what are TDRs. This is a very important thing, new thing. See, I'll explain it to you in a very simple way. Transferable development rights means what? Say for example, if there is this road, okay, in the city of Mumbai, and here there are some plots. Okay, here there are some private plots. Okay, now this road is of say 20 feet. This road is 20 feet wide and these are the private plots. Okay, in cities like Mumbai, in urban area, there is a concept called FSI, floor space index. So floor space index basically means that it is a percentage of the built up area to the plot area. So for example, if this particular plot, okay, this plot, if say this plot is say 5,000 square feet, and if FSI is equal to 1.5, that means this person can do the construction of 5,000 multiplied by 1.5, that is 7,500 square feet of construction area is possible, is allowed on this. So that is FSI of 1.5. If FSI is 1, then only 5,000 square feet construction can be done. So there is a floor space index, that is a government policy which is allowed, and it differs from city to city. For example, if in this area the floor space index is say 1.5 and on the plot of 5,000 square feet, that person can now construct 7,500 square feet, 7,500. Now the government wants to expand this road. Okay, the government wants to expand this road and it wants to acquire 5 square feet here and 5 square feet here, basically doing it 30 square feet wide. Okay, so what will happen? This portion of this plot is going in this, right? This portion of plot is going. Now the government can either pay compensation for this plot or it can, give them some another plot. But in urban areas like cities like Mumbai, Pune, Delhi, Bangalore, Hyderabad, the price of these lands are very, very high. Okay, so government cannot pay compensation for this land because the prices are exorbitantly high. So what government does is government allows them some extra FSI. Okay, some extra development rights. So that is known as development rights. Okay, so government will tell them, okay, by law you can construct 7,500, but now we are giving you extra FSI of 0.2. Okay, so you can, since we have taken this much 1,000 square feet area from you, you can have 1,000 square feet more construction in the remaining plot. Okay, in the remaining plot. Or the government can also allow, if for example this land belongs to some builder and that builder has land in another locality of Bombay, so government can allow them and government can tell them, okay, you can use this development right in that another locality also. You can use this development rights in another locality also. So for example, in another locality that FSI was 1.5, so government will tell, okay, you can use that development right and you can construct more than 1.5 FSI. Okay, so that is how. And transferable meaning it can be sold in the market. So for example, if this plot person, if he doesn't really want to utilize this development right, he can sell it to this person. Okay, and then he can use it. He can sell it to some another builder also. So that is known as transferable development right. And in this transferable development rights, FDI or FII, no foreign investment is allowed. Then foreign investment is also not allowed in inventory based model of e-commerce. Okay, e-commerce meaning Amazon, Flipkart. These are all e-commerce. Now, e-commerce business is of two types. One is the inventory based, okay, and another one is marketplace based. So Amazon, Flipkart, these are the marketplace. Basically, they only provide an online platform where buyers will come and sellers will come and they can transact with each other. Whereas in inventory based model, the company like Amazon and Flipkart, they will own the godowns, they will own the goods themselves. In this case, Amazon and Flipkart, they don't own the goods, they don't have the inventory of their own. It is the inventory of the sellers, okay, and they directly sell it to buyers by using Amazon platform. But in inventory based model, the inventory is owned by companies like Amazon and Flipkart, so that is not allowed in our country, okay. Then another one thing is that partnership firms and proprietorships having foreign investments are not allowed to engage in print media sector. So if there is any company which has foreign investment, okay, the proprietorship or the ownership is of a foreign entity, or if it is a partnership firm with a foreign entity, they cannot engage themselves in print media sector, okay. They cannot open a subsidiary, or their company cannot do the business of print media, okay. So print media meaning newspapers, magazines, etc. That is known as print media. They cannot do that. Then FDI is also prohibited, okay. FDI is prohibited in retail trading, okay, retail trading, atomic energy, railway operations, because these are solely government operations, okay. These are into government domain, they are not open for private sector. So that's why obviously FDI will also not be allowed in this, because the Indian private companies also cannot invest in this, they cannot do this business, railway operations and atomic energy, they cannot do it, okay. Lottery business, it is not allowed. Gambling and betting including casinos, FDI is not allowed. Then in agriculture, okay, FDI is not allowed. But in agriculture, floriculture, horticulture, seeds development, animal husbandry, pisciculture and services related to agro and allied sectors are allowed, okay. FDI is allowed in this, okay. So in this particular sectors FDI is allowed, but apart from this, anything else in agriculture, it is not allowed. And in plantations also FDI is not allowed except for tea plantations. So in tea plantations FDI is allowed, okay. So just keep this in mind. Now if the FDI is through government route, I have told you they will apply through the foreign investment facilitation portal. That portal will forward the application to the concerned ministries or departments and they will approve the investment proposals. This is a new policy after 2017-18. Now any investment by entity or person from a country having land borders with India are allowed only through government routes. So even if it is open through the automatic routes, okay, any investment is open through automatic routes, it is not allowed for the countries, for the entities or persons who are established in countries which are having land borders with India. Land borders meaning Pakistan, okay, जिनके साथ में हमारे सरहद है, लैंड की सीमा है, पाकिस्तान, अफगानिस्तान, राइट, देन चाइना, बांग्लादेश, Nepal, Bhutan, Myanmar. So all these countries have land borders with India. So any investment coming from these countries, they have to come through compulsorily through the government routes. They cannot come through automatic routes, even if automatic routes is allowed in that sector. Now friends, if you are interested, okay, this is just for extra information and extra knowledge. If you are interested, you can download the file in the description section. I have put a link in the description section and there is a file that will open, okay. You can see the sectoral caps on foreign investments and the sectors coming under the automatic and government routes. So which sector are coming under automatic routes, which sector are coming under government routes, okay, and what are the maximum foreign investments allowed in a particular sector, that are known as sectoral caps, okay, ceilings. That also you can see. Majority of the investment these days, they are allowed through automatic routes. I think only about 11 or 12 sectors are there which have to come through the government routes, okay. Otherwise majority of them are under automatic routes. So if you are interested, you can open the file and you can have a look at it, okay, just to understand. So we'll continue foreign investment in the next video also. Thank you.